That's how it's done with no funding. Truly impressive. All right, the next panel is called How I Raised My First Million. And what's really incredible is all the entrepreneurs are immigrants, or at least not from here. Great stories, and I'm sure you'll enjoy. Nathan is our panelist. Ready? Nathan, our moderator, has a company called Fundraising, helps you manage your investor relations and everything you're doing as you're getting started. Yep, please. All right, rock and roll.
Cool. Are we on? Are we live? Perfect. Well, thanks for having us here. Really interesting panel, very diverse panel here in terms of fundraising background and history. I thought we'd start off just by going down the line, saying who we are, what our company does, and how much you've raised. I'll start. My name is Nathan Beckert. I run FounderSuite, which is the leading CRM for raising money. So if you're thinking about raising money, check it out, foundersuite.com. And we've raised just a little under $1 million. Please. Branko.
Hi, my name is Branko. I run a company called Immediately. Our latest product is called Gong, and we make intelligent, sexy software for salespeople to help them foster stronger relationships and ultimately close more business. We've raised about $2.5 million so far.
Hi, my name is Philip. Our company is called Noah. We were called Locate before, so we just rebranded. Locate won TechCrunch Disrupt 2.5 years ago as a smart bike lock company, and we've evolved since then. And what we've actually now built is a software suite to help manage bike share fleets. So we effectively don't disrupt, but actually enable this industry, because we see there's a huge future in bikes in the transportation mix. We've now become an American company as well. I'm happy to talk about that if that's interesting later. And in terms of raising, we don't actually talk about how much we've raised, but it's several $1 million in seed. And yeah, currently not seeking money.
I'm Shaukat Shamim. I have done a few companies, 6 to be exact. My latest company is U+, and we create a platform for consumers to get things that they love for free. And all my combined companies have raised over 50 million. We exited companies for over 250. And this company we raised like a few multi-million dollars.
Awesome. Thanks, guys. So let's just kind of start from the beginning and talk about when you first started raising money. How do you get going, right? It seems obvious. You're reading every day in TechCrunch about companies that have raised lots of money, but it's not all that easy to get going. How did you first identify some investors and start the pitching process? Maybe just go down the line.
Yeah, I knew nothing Jon Snow when I started, and I think that's a common theme, is that you read in TechCrunch exactly somebody had a fantastic idea and built a prototype and raised $5 million. But what the story often doesn't say, or you don't notice, is that that person is on their third company, and they were able to attract that kind of capital based on completely different factors than that prototype, right? And so I went into it kind of like, oh, we have a great idea, and we have a great engineer, and so we should probably raise a couple $1 million because that's what it's going to take to build it out. But the reality was very different, and so I pitched a lot of Menlo Park kind of sandhill investors, only to be told that that's not at all where I should be spending my time and where I should be at.
You started pitching VCs first?
That's right, which is a terrible mistake. It was awful, much pain. And then finally I kind of realized that one of the most important lessons is to be pitching the type of investor whose thesis is aligned with first-time entrepreneur, the type of product that we're building, type of problem that we're solving. And then we started getting our first yes, but that took about 30 very painful meetings to learn.
And how did you identify, after churning and burning through Sand Hill Road, how did you start to identify these angels and others that were more of a fit?
Yeah, well, I don't know if it was the most efficient path to learning that lesson, but the amazing thing about Silicon Valley is that everybody tries to be as helpful as possible.
Sure.
And so people don't just tell you, oh, you're not a fit, go away. They tell you you're not a fit because, and you might be a better fit for these 3 people. And you kind of play this game of honing in on what a fit means and getting a better sense. And if you come in and I think you show the right type of humility and teachability and pattern recognition, and people see the right type of dynamism and raw talent, they will gladly refer to their friends who might be a better fit. And so for me, the network growth was explosive on account of me making mistakes and meeting people who I was not at all ready for, but who were willing and happy to introduce me to more and more people.
So that time spent on Sand Hill Road wasn't necessarily time wasted. It opened other doors for you.
Yeah, it was time painfully spent and lessons that were extremely important and then led to much smoother fundraising rounds later on.
Cool. Philip, so you said you won TechCrunch Disrupt, so that obviously gave you kind of some instant visibility into Silicon Valley investors. Did that generate some initial investors? And before we came on backstage, do you mind if I tell like a couple of the interesting investors that invested, like
Sure.
Li Ka-shing, China's richest man, or one of the top?
Yeah,
Something like that?
I believe so. Yeah, it's this fund, Horizon Ventures. Yeah, they've become pretty active investors in software companies. I think the first major investment it was with actually Facebook. They put up the IPO money together with Microsoft and Excel, and from there on they've invested in a lot of other software companies. I think Skype, Spotify, Slack, Zoom are probably on their portfolio as well.
So two questions. So first, what did winning Disrupt do for your fundraising? And then second, how did you get in front of Li Ka-shing?
Well, we didn't get in front of him, so it's it's like with it's effectively the funds, right? So it's, and then the fund managers. I think our experience is probably very different to most other startup companies, and still I wouldn't say easier, just different in the sense that when you do win an award, then investors come to you. So I think the difficulty was more actually in deciding whom to work with, and then of course. VCs are masters in negotiation. They've done this all of their lives, and they're very good at making deals. And figuring out actually what are the right terms. I think that was the most complicated part for all of us in the team. Especially when you think about things like, I studied law, but I'm not a lawyer, and this is a long time ago for me as well. And I certainly didn't study financial law and like liquidation preferences, those kind of things. So I think understanding what the right terms are, long term in particular, right? I think it's very important to distance yourself from the money that you're being offered and really thinking, well, what makes sense in the long run for the company. And I guess also it stops you from actually potentially looking out for more options, right? Because you have some initial really good offers, and then you go with those, right? Because you do know that you need money to obviously get the business forward in the first place. So I'd say in that sense, our experience has been different, that investors have come to us. What I did do though, early on, I understood that it was super important to get into the US market as well and get to know US VCs. So like David saw backstage, I hadn't seen him in a year and a half. Even when we weren't looking for money, I just started traveling here to get to know VCs. Because ultimately you work with people. You don't work with a fund, you don't work with a brand, and there has to be chemistry because you're going to be working for many years.
Sure.
And so what we did do is actually build relationships with VCs here, and some of them have become advisors, some of them have become shareholders now as well. And I think that's been super valuable because they, like you said, are so helpful here. And that's a huge difference to European VCs who they don't share as much knowledge, put it that way, and they're not as helpful. And here you find even some VCs literally just supporting you even without an interest to actually invest in you, that you might even not be a fit, but they'll be very helpful in telling you who you should work with and what you should look out for, and I think that's been super helpful in the process. And that's really invaluable too, because that's effectively getting very expensive advice for free, or very valuable advice for free, I'd say.
Yeah, for sure. Good. I want to come back to your crossing the pond and relocating here, because I think that's interesting. A lot of folks in the audience are from outside the US and wanting to raise money here, so table that. But Shaukat, let's talk about your, you've done a couple companies, so you're not, first-time entrepreneur. Did you already have the Rolodex of investors? How did you get going on your round?
For me, I would say my thesis is all the things you hear about fundraising, they're all wrong. You will have your own story about fundraising. I was fortunate. I was in Yahoo very early on, and then I became a venture capitalist in a pretty large fund. Had a massive return from as a partner So lots of VCs knew about me. And then I decided to start a company. I raised my first seed money when people didn't even know what a seed is. I wrote the first convertible note. It's all favorable to us. And a bunch of Sand Hill Road VCs gave me money. Me, myself, and a 9-point PowerPoint slide. And that happened, we thought like, man, we rule the world. Must be doing something interesting. Turned out to be that wasn't it. Then in my the company I did it next, I said, let's follow the same route. And I was fortunate at that time too, because my other company we did really well. So we raised money again from Sand Hill Road VCs. We talked to two, we got two. So we said, wow, this must be the rule that everybody follows. Then in that company, we raised a lot of money, and not every company's history is the same. So we had to kind of hustle for it. Then I did another company, which I said, you know what, I'm gonna just raise from individuals and very well-known people. So I did that, and I failed on that company.
That's a company prior to you.
U+, that's right. There also we raised a few $1 million. And when it came to this thing, it was like you had you hear all the stories, people are getting funded, before they have all kinds of stuff. And I look back at my life as I had done that, but don't know whether I can do that again. And it seems like market has changed. So I didn't know what the formula is at that particular time when we are raising money. So I said, let's see whether I can do something very differently. And this time, I wanted to go after the most critical and the most value-added investor, although chances are 90% they will say no to you. I said, let's get their money first. If I do get that, then we will raise the company. So it took us a little while to do that because many of these guys, they're hidden. They're extremely high profile. They founded things like SoftBank of the world. But it's kind of, so the experience was very different. But it took us longer, but we finally got there.
Okay, got it. So our time is already short, so we're going to cut right to some advice for folks in the audience. If you could, I like this kind of rewind question. If you could rewind and give your younger self advice when you were first starting on that round, what would it be? Would it be to skip the Sand Hill Road? What would you tell yourself to either do better or avoid?
Yeah, I think make drinking buddies with a couple of VCs, not to get preferential treatment, but to be able to empathize with them, to be able to get into their head. I think a lot of young entrepreneurs have this sense of, my idea has to be really cool, and then I have to present it in a really cool way, and then I'm going to get funded. But it's not a black box like that. That's not all that goes in. It's what's important is understanding what's on the other side. There's limited partner dynamics, and there's fund theses, and there's a fund size, and that has to yield a certain return. And the investor is thinking all those things. So the investor is thinking, am I going to get in trouble if this investment goes poorly? Is it going to look bad on me? And so you have to realize what motivates investors, and it has a lot to do with fear and greed and limited partner dynamics, and it has a lot to do with how big the fund is. It has a lot to do with whether they're more comfortable going for 5x returns or whether they're more comfortable exposing themselves to a much higher risk profile and going for the 150, 100x. And that all goes into the pitch. Am I pitching a post-B exit story, or do I know that this company has to go public in order for it to even fit the bill for this investment firm? And it took me a year and a half to learn that, and that was when I was able to go and raise a $2 million round in a couple weeks, because I knew exactly which investors to pitch and how to pitch them. And I was able to sit across the table and speak in the same language. I was not telling them what was important to me, which is what entrepreneurs do, and that's a mistake. the investor cares about what's important to them.
Yep.
And there tends to be not that much overlap between what excites you about your company and what makes it a viable investment for a VC.
Good advice. That's so point on. Make drinking buddies with these guys, get inside their head, tweak your pitch to match that. Really good. Philip, little advice for your younger self, and if you want to tie in the international crossing the pond question, that'd be cool.
Well, I'd actually say, true to what we've actually done, I think stick to your guns, make sure that you communicate your vision really well, and because as you say, well, VCs sometimes don't care about the same thing as you do, but I think it's really, really important that you make sure you protect your business, because at the end of the day, we don't do this for financial interest alone. I mean, if we did that, we could do a lot of other jobs. It's really grueling to be an entrepreneur, and to work in a startup environment is super, super tough. And you want people who are along for the ride to really help you protect your vision as well. So I think that is super important. So I would say look beyond the money at all times, because there's a lot of people who can give you money. If you're onto something good, there will always be people who give you money, and there's always a fit as well. So I think it's really, that's the key thing, like relax. You will get money if you're doing something right. If you listen, you will hear what you need to fix to make your business model fit with your vision. And I think that's really key. Your question with regards to the US, this is still the best place on earth to start a company. Because of, not just because of the capital and because of the investors on Sandal Road, but this country is amazing in embracing new product. And that is kind of key. And I think if you can make it here, you can build a product for the American market. You can also then take it to the rest of the world. And I think that's super helpful here. So you've got really amazing embraces of new products. And and I think a lot of understanding for new businesses. So I'd definitely come here again, yeah. I wish I'd done it sooner. That's my advice to my younger self. So I wish I'd come here sooner, yeah.
That's good.
Yeah.
Good feedback. Shalka, any?
I would say worry less about pitching to VCs, because you should worry more about what you're pitching than who you're pitching to. Regardless of what you do, there will be people who will say no to you, and sometimes, as an entrepreneur's instinct is when somebody said no to you, you kind of hedge, you kind of go around it, you become a salesperson, and it won't make a difference much. I usually like people when they tell me no, and there is a good reason behind it, and live with the fact that people will say no to you. Other advice I will give to you is just learn the fact that the value-added investor, the myth that we have in our mind, that people will, all of a sudden an investor will come in and your life will be so much different, better, is a complete bogus concept. You make the company, investors don't. The good investors will stay out of your way and give you help. And as an entrepreneur, there are only a few help that is meaningful to you. Actually, if you ask me, I would say only one help that is meaningful to you as an entrepreneur. Take my funding risk away. Everything else, if your investor know more about your business, you're in trouble. You're not going to make it anyway. But that's the only risk that they can take away from you, which is your future funding risk. And I would say only probably 10 VCs I can think of, 10 firms, can legitimately claim that they can take your future funding risk away. Everybody else is, you got to look at it, the chemistry is important, but as long as they're not destructive, people are not drinking from their own Kool-Aid, you have to kind of deal with it.
So I was informed we actually do have a little bit more time, so we'll keep going. And if there are any questions from the audience, we might have a few minutes for that. Maybe one question I'm always intrigued by. You hear the different streams of advice. Do you conduct a laser-targeted fundraise where I want these 6 guys or nothing, or do you go for a numbers game where you talk to every investor out there and from that wide, drag net, you pick a few? And for Founders Suite, I had to talk to a lot of investors. It was a numbers game for sure. I think I talked to like 200 investors to get to our 11 we ended up with. I don't know, laser focused versus dragnet.
I did a lot of the Dragnet, and it was rich in learnings, but I wouldn't say it's the right move. And the more time I've spent and the more money I've raised, I go for more and more focused. And I think not just in terms of the investors, but almost mainly in terms of timing. A big mistake that I made and that people make is go and fundraise too early. It's like, well, we have 6 months of runway, we have some early proof points, I hope that I can trick somebody into giving us money right now. And it's better to go out when it's almost too late, when you feel like, well, these people would be stupid not to invest now. It's so obvious, and I can be like Jack Dorsey and make a deck that says the 100 reasons why you will not invest in Square, so that I can answer all of your objections right away.
I like that.
And know that I'm prepared to field every single question. And so almost, I think, be focused. It helps to go out too late with too many proof points, and then go out to the right people, do your research, and have relationships established with them. You know, I think do the wide net for building relationships and for learning, for getting feedback. But then don't go pitching 25 partnerships. Go pitching 3 to 5.
Cool. Good. We'll jump around. Shaukat, any comments on that?
You know, the realistic thing is it all depends on what stage you're in, what your idea is, and what are the options that are available to you at that point. We all want to, you know, who doesn't want that, right? Who doesn't want to have that Jack Dorsey thing? You want to have leverage. But the fact of the matter is, very few startups, probably 1 in a million, will have that kind of leverage, and we will hear stories about it, and we'll say, maybe I'm the next one. But just statistically, you're probably not. So, you know, I've done both. You know, at Rhythm, I picked 6 VCs, we got 6 term sheets. The other one, we said, maybe this one will be the same. We pitched first 2 and we got a slap on our face. And they said, wow, we need to do something else. It all depends on that. Don't be too disheartened by that. If you're lucky enough where you're talking to the one that you want and they're saying, yay, go for it, right? If not, widen the net, but do it fast. Only thing that money raising and venture community does not like is a stale deal. So you don't want to be perceived as you are failing.
Yeah, good.
I think I already answered it from our perspective. Definitely focus, especially also the stage, you know, of course, that you're in. I guess if you just have an idea and you don't have a business yet, then you probably do, and you don't have any outside interest. Sure, you have to go and create it yourself and speak to a lot of people. Otherwise, as in generally, of course, you have to be focused and really find out who is a fit. So that's general advice. But I think in our case, I already explained the experience was slightly different. But for sure, it depends so much. I think what both here on the panel have already said is pretty much true with regards to that. Yeah.
Cool. I think we're out of time. So we appreciate it. Can we have a round of applause for these guys? Very good. All right. Oh, I'm sorry.
Nope, we're staying.
Do we have time for Q&A? Yes, we do. Okay, sorry. Let's have a few questions from the audience. Come on back. I can't see if...
Tipped off for a friendly question.
Hi, what would you say are like some of the factors that could turn a campaign into how could a program go viral from your experience?
Can you repeat the question one more time?
If you have observed some parameters that could lead a program or a campaign to go viral.
A funding campaign?
Funding campaign, a program, whatnot.
And by go viral, do you mean just pick up a lot of momentum and
traction and attraction and what and so on and so forth?
Anyone want to tackle that?
If we had that answer, like everybody will be done, right? There is no real formula behind it. Again, it depends on. It really depends on your leverage. I mean, you know, early stage, if you're just starting a company, seed stage, you know, you really have only a couple of leverages that you can really play, right? You can either play your team, or you can play the idea. But people don't put too much onto that idea in the early stage because ideas fail. So you really don't have a leverage point. So unless you're a celebrity and somewhat perceived as a celebrity, like things really don't go viral that way, right? So don't worry too much about being viral. It's not a PR thing. It's you want to get money and get your business going.
You don't need to be viral to be successful. There's time to be viral, and there's a lot of nonsense puppy viral videos that don't raise money. It focus on value.
Good. We have another question.
I have a question. What I don't see here is a female, and that's, I think, the elephant in the room, right? What do female founders go through for early stage? And that's sort of the question maybe for the startup conference or panel here.
Sure. Do you guys think there is a strong, medium, or non-existent bias for or against females raising money? Have you experienced it? I've worked with a couple. Before it started Founder Suite, I was consulting the startups and worked with a few female founders, and they raised money. It wasn't an issue if you had traction, good idea, and product. So from that limited experience, I didn't see as much bias as that you might read about in TechCrunch or Pando Daily. But have you guys experienced this? What do you think? What's your opinion?
To the contrary, I'd say you actually have a very good competitive advantage since most VCs are still male. They'd much rather have a meeting with a female than with a male. I'm not saying that in a sexist way, but seriously, it's I think I was raised by women. I didn't grow up with my father, and I know very strong women in my life. And for example, our lawyer also, who represents us as a female, she started out at Wilson Sonsini and is, I think, one of the best lawyers in the Valley, and she's a woman. I think she is a perfect example of how to use certain things as an advantage in your career. And I think it's just generally still the case that technology, most of our engineers happen to be men. I'd love to have more female engineers in the team, but we don't find them. It's not that we've got over 20 engineers now in the company, and it's not that we say like only males apply, but there is no female applicants for electronic engineers, so that's still lacking. And a lot of founders happen to be engineers still, at least if you look in tech. But I think anything that is, I think all the possibilities are open. I'd say there's definitely nothing against women as a bias. I think people actually welcome women, and they stand out more when they do something.
Good point.
So
use it to your advantage, right?
Yeah, I would say so. Yeah.
Interesting.
I would say if a VC is funding you because you're male or female, you probably should think twice about it.
That's true.
Because it's not a charity thing. It is not a debate. It's actually a focus on building a business. And in that business, nobody really cares about who is making the decision if you're not in front of them. So anybody who is saying I'm going to fund or not going to fund, if a male, female, whoever that is in front of you, that's just ridiculously silly.
Yep. Any final thoughts? I think we're
50-50 on our team. We've been lucky. We're exact same number of men and women. I have some badass female founder friends, and I think it's a bummer there's not a woman up here. That's probably an oversight. And I would certainly just reiterate, if you ever get in a room with a VC and you feel that your gender plays a role, just walk out of that room as soon as you can, and go into a room where somebody's interested in your value proposition and your proof points. This is the only thing that should matter.
Yeah, no, I think that's good. All right, well done. Thanks, guys. Very good.
Quick question. What happens if the story is not a success? What happens with your relationship with your investors, and what would be next? Because
If the
they
story-
took our risks.
Sorry, start the first part. What happens if your story goes sideways? Was that the? Oh, that's good.
As in the company doesn't work out? That I have about 60 investors on my cap table, and all of them I'm on texting terms with. And I think that's important, to have a personal relationship with every single one of them. And they know that I have done everything in my power to make the company happen. And we have that relationship of trust. And so I think it's an important role of the partnership between a founder and a VC to know, for the founder to feel like the one thing they don't have to worry about is disappointing their VCs if the company fails. They have to worry about making it not fail and not having perverse incentives driven by fear. And so with my investors, I know that I am just going to do anything I can to make the company a success. And if it's not in the end, they're not going to be disappointed. They're going to know that that was the case. And that is an empowering feeling. That lets me not optimize for small success, but for the opportunity at a big success. And so they shouldn't blame you for failing if you've done your best.
But I would say the fact of the matter is, if you, unless they are VCs, they are, even their seed funds or anything, they are probably not going to talk to you for a while. It's okay though, but companies do fail, and this is a high-risk capital that they're giving you. But don't expect them to come around and give you money right away. Like they may give you money like later if you do more companies, but they will be a little upset with you for a while, and it's reasonable, right?
Yeah, I think I can echo that, just from founder friends, also having seen businesses that didn't do so well. I think what's key is just having a very open relationship with your investors, so that, if you do fail, it doesn't come as a surprise, and it's not really failure. I think the best value that, you mentioned before that you find that there's a limit to the value add. I think that really also really depends on the type of investor that you have and that you've chosen to work with. Like, we've only got 4, so it's a small group, and on the board there's only 3 people. And we don't have formal board calls to discuss stuff, and I definitely discuss with them not the stuff that's going right, but always the challenges, because that's where I can tap into their wealth of knowledge, and they'll reach out within their group of people who can help you. So I think that's just the most important thing, is that you just basically never have them be surprised by what could be perceived as bad news, and actually involve them. They're 10 times more experienced and smarter in most cases than you are in certain areas where you need support, and they have a great network. So I think the ones that get into trouble are the ones that have been dishonest, have been hiding facts, or simply haven't shared information. Because a lot of times I think failure is actually preventable simply by sharing, I think, what's going on a lot more and asking more for advice, because there's a lot of people out there who can help you if you ask for help.
Yeah, I think it's always the ones that come as a surprise that leave the black mark on the founders, right? If you've been communicative, it's usually accepted. So, good. Are we done now? All right.
We'd love to stay, but I think it's just a time limit, really.
I think that gentleman.
If I may ask one more question, just about the team, the process, or some of the key points of building the team around you.
Okay, let's just take this quick. Building the team. A post-funded, so we assume it's a post-funded question? Pre, okay. Building a team pre-funded.
I think in that case, it has to be somebody, the biggest rule of thumb, of course, aside from core competency. If I need a technical co-founder, they better be able to code. But the number one determining factor of people that have worked out and haven't worked out for me has been, can I talk to them the same way that I would talk to my sister when I'm giving them feedback? Just very, very, very honest, without any frills attached. Don't give them the feedback burger of, you're doing this right and this is fantastic, but this is kind of shitty. You have to be able to give them the unfiltered you, and it works, and you're on the same frequency, because there just will be constant friction otherwise.
Yeah, I'd say that's good general advice. Pre-funding is tricky, of course, because your team's not going to be big pre-funding. But I'd also definitely say focus on the character and the integrity of the people you're going to work with. They should be very different to you. They should be strong where you have blind spots. And you should definitely talk more about their weaknesses and your weaknesses with them. Show your warts, I think is one way of saying it. And effectively making sure you share the same values, because yes, it does get tough. Time is up. So we hear you, we read you. So I'd say that's definitely the advice. I would quickly say, look,
most of the people will tell you, not everybody will tell you, build a great team. Can you point me to one person who says build an average team? That's silly, right? One other person who I'm very fortunate with having an investor is Reid Hoffman. He used this word many times to me and said, as a startup and independent at any stage, the most important thing is speed, and expect that you're living in a world of imperfection. So if you're doing that, you're playing the game perfectly. That means is sometimes you just have to go with it, right? The world is not going to be a perfect thing for you, and you have to have enough belief in you that when things turn imperfect, you will hustle and you will do it again. That's more normal in my opinion.
Awesome. All right. One more round of applause for these guys. Thank you.